Good morning, traders. Welcome to this video analysis provided by Admiral Markets, where we take a look at the NFP impact on the US dollar by looking at these currency pairs. First of all, though, please be aware that this video is intended for a global audience. It may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading foreign exchange and other financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes, and by continuing watching this video, you agree with this disclaimer. Alright, first of all, the pound USD fell on Friday with NFP positive figures. The dollar strengthened. But what happened? The pound USD stopped here at the around 152 level, which is basically right at the bottom, the previous bottom, and also this trend line when connecting the previous 2 points. And now there's a trend line with 3 confirmed hits on the bottom and also 3 confirmed hits on the top. So these 2 trend lines, I think, are the dominant factor here on the pound dollar. A break of any of these 2 lines could see a follow through to the downside or to the upside. What I'm looking for, in other words, is a break of 152 for a move down to 150. And in that case, if there is a bearish break, I would put a fib from here to here, and we can see that price stopped at the 50 fib with the target at the minus 272. Or, and I could put this fib a bit higher, perhaps like this. Or if we do get a bullish break, I would put a fib from here to here, and we had a very deep retracement, 88.6 fib in this case, at 152, and the target would be 155 for the moment, the minus 272 target as well. Perhaps even continuation to the minus 618 at 156. So that is basically the main scenario, I would say, or the main analysis for the pound dollar on the 4-hour chart. We had a lot of upside momentum prior to this triangle, but we also had recently some bearish momentum. So I think from that point of view, we can see a continuation of the bearish momentum, or actually still of that bullish momentum, easily on this chart. So from that point of view, both sides, both breaks are possible, and from that point of view, likely. All right, daily chart, we can see that triangle clearly in play. And weekly chart, we can see that price has retraced up to the 50 fib, or very close to it, in fact. One thing that is still possible is, for instance, a continuation of this momentum that we had here to see a zigzag up to the 61.8, after which a turnaround for more bearishness could happen, because of course this was a big fall. So something like this seems very likely to me at the moment, but obviously I will keep an eye on the trend lines to see if that is indeed taking place. AUD/USD 4-hour chart is right at a support level, and that's a pretty interesting level because a few days ago or a week ago or so, price bounced at this level pretty heftily, but equally turning around just as quickly and retesting that support. And personally, I would expect a break on the AUD/USD. The thing is, though, that there are still quite an interesting level of support just below it at around 75. So there could be a bit of space from an intraday perspective from 76 down to 75.50, 75, but ultimately quite tight, as you can see, in my opinion. So a bearish break could happen, but from a trading point of view, I don't see a lot of potential in that short. I don't like the AUD/USD, particularly at this moment, considering the support so close by, but also very strong bearish momentum. So I'll just wait and see how this turns out, and perhaps below 75, when price starts to accelerate below support, then it could be a different matter. The alternative, if price does bounce here at support, then a break above 78.25-ish, 78.30 would break the previous 2 weeks high, right? So in that case, we could see a bit of a bullish break to retest the top at 81.50. That would be the alternative that is interesting, besides the break to below 75.30. Today, of course, the market just started, so I always like to keep an eye on the Monday open and see how everything slowly but surely evolves, and therefore like to specifically look on Tuesday and Wednesdays and Thursdays more than Mondays. And you can do that with me when looking at these live trading webinars actually, Tuesday and Wednesday morning, trend lines and intraday and intra-week. Monday and Wednesday, Nennet is going to take a look at the FX recap and a new approach in pivot points. And then Thursday, Nennet and I together will be looking at trading naked charts on Thursday evening. So I do hope to see you in one of these webinars, or perhaps all of them. But before we do that though, we do have the euro dollar and the dollar yen to look at. And basically the dollar yen I find one of the most interesting ones. The euro dollar, not so much at the moment personally. Here too, looking at two trend lines dominating the market, and I wouldn't be surprised if price respects these perhaps for the next week or so, just to show a bit of indecision here between these two lines. There could, of course, always be a breakout above or below, but price is right at the middle, so it's going to take a bit of time before that happens this week, if it all happens this week. Personally, looking at this particular situation, I would like to see price either break or above or below, obviously, but that could take a while. Now, from a wave perspective, this could be a bouncing spot, and this could be a wave 4 still. And on Friday, there could have been a zigzag completed down to the minus 61.8 target. So from that point of view, this, from a wave perspective, could be still a bouncing spot. But definitely the momentum was bearish on Friday. So from that point of view, it's risky. You can see even a smaller little triangle here. Perhaps the break of that smaller triangle could indicate a bit of an intra-week perspective for today. But Mondays are always, a day where price does not move a lot. It's slower price action. So I would personally rather wait for today to close to see what kind of break of this smaller triangle is sustainable and perhaps tradable tomorrow. Dollar yen is a bit different in my opinion. Dollar yen had a very strong upside, then a sizable correction where I'm going to draw those green lines right there. Ultimately though, it used that kind of consolidation zone to find support for further upside, and it broke to the upside. When zooming into the 1 hour chart and placing a fib from the breakout point to the breakout point here, then basically from swing high to swing low, price has already retraced to the 38.2 fib, and that could be a bouncing spot. I personally wouldn't be surprised if it even hooks back to the 50, but any of these fibs, the 38.2, the 50, the 61.8, could easily be bouncing spots for further upside to the target. For the moment, the minus 272, but it could also go further and accelerate even to higher Fibonacci targets like this minus 1000. So that looks like a interesting, in my opinion, break, pullback, continuation potential on this dollar yen. Make sure to take a look at Admiral Markets in the social media with a lot of content brought to you daily, like the wave analysis that I provide as well. So take a look at that and hope to see you in the webinars this week very soon, and wish you all happy hunting and a great week. Cheers.